It's Mathew, Cassidy, Managing Director. It's been another busy year in 2018 in financial markets. We very much thank you for all your support this year. Hopefully it's been a prosperous year for yourselves and your family, and we're certainly looking forward to a successful 2019. As we focus on next year, there's many factors taking up our thoughts at the current point in time. We've got a federal election, we've got world markets, probably a little bit of volatility, etc. So we're going to be keeping our eye closely on a number of matters and making sure that the portfolios can have a prosperous year and also sustain periods of volatility. On that note, I'd like to introduce Jonathan Bayes for the December Markets Update.
Hi, I'm Jonathan Bayes, and this is our December monthly investment market update. Fortunately, last month portfolios had a bit of a bounce back from what was a tricky month in October. And importantly too, within the Aussie equity piece, we had some stocks actually really starting to perform well. And it's actually put us with 11 months on the clock into a pretty good position relative to the market. So hopefully, if we close out December well, we should be well ahead of the market in the year of 2018. What bounced back well for us last month was Afterpay. We got a positive outcome from the ASIC review into payday lenders. Much like what Afterpay had been looking for, there won't be any increased regulation on their business model. There was an update from the company as well in terms of the growth in US customers and retailers on the platform, which looked incredibly strong. And I would imagine that by the time we hit the end of the year, we'll see some more positive news from Afterpay on both their local business and on Christmas sales, but also too on the expansion in the United States and in the UK. So that stock was up about 25% last month. Beyond that, as the market stabilised, some of the fund manager recommendations we've had in the portfolio have started to work well. So we've had a really good bounce in Pendle, which is the old BT Investment Management, from around $8 to be about $8.80 as we speak today. Magellan's been very, very good since we recommended it. But it's really, actually, it might be well worth actually flagging just how well that stock and indeed that fund has done, because it features in both our international equity piece, but also within our Aussie equity piece. So Magellan, the holding company, is up about 20% since we recommended it, maybe even a bit more. We saw a big upgrade in the dividend payout ratio a couple of months ago. And it's all come about on account of very strong recent performance from the group. And in the Magellan Global Equity Fund, which is a real anchor position for us on the international side, that fund has actually outperformed the index in the 12 months to the end of October by over 7%, which is a huge effort by this business. Only 12 months or so ago, the company was starting to get backhanded remarks about their performance, which was very, very short term and wholly unnecessary. And in the last 12 months, they've absolutely slammed it. And so a really strong performance there. But also too, BWX has bounced very well. We had a good meeting with management about a month or 6 weeks ago, and it seems to me that the market is seeing a similar thing to us, which is that the issues that they faced in the first quarter are proving to be very much one-off. We also had a good bounce in Newfarm. A couple of very well-regarded Australian fund managers talking about the prospects there for their omega-3 canola and the sale of that product into global commercial aquaculture. So we had a better month, and encouragingly, in a flat market, portfolios actually really started to outperform. One subject we might want to talk about a little bit at a global and local level is politics. We flagged it up a couple of times in these video briefs during 2018, but it seems to me that it's becoming more of a feature for investment markets as we start potentially the new year to come. Politics is a big issue in Europe. We've heard about Italy's ongoing to and fro with the European Union over expanding their fiscal deficit. We'll wait and see when that plays out. So politics is a big deal. At a local level, politics is going to be a big deal in 2019, as we've discussed. We had the Victorian election here just late last month in November, and it was a landslide to Labor. And it seems to indicate that that's the likely way that the federal election in May will go as well. What I think we can glean from the Victorian election indeed is that infrastructure spend is going to be front and centre from both sides of politics. That's something that I think supports a couple of our key recommendations. Downer Group in particular looks like a standout buy in the 620s or 630s, and a long-standing recommendation in Cube Holdings, which has been actually very good in the downtick, also I think stands to do well. I think things in 2019 will be a lot tougher. We've got politics, which I alluded to in the last segment, looming as a factor. We've got higher interest rates, and we've got a reduction in global liquidity. We have pressures potentially building, I would say, on corporate profit margins with wage growth coming through. But at the end of the day, the US economy is still in very, very good shape. The Chinese economy is probably due a fresh stimulus as we hit the turn of the year. And in Australia, while we certainly have problems on the housing front, we do have this enormous infrastructure spend, which ideally can cushion some of the downside for our economy. So I would say things are going to get tougher. We've alluded to that in recent months. I think it will be a tougher year, but I'm not overly concerned about investment prospects in 2019. I think, again, much like we have in the last 12 or 18 months, holding a bit of extra cash will be a good thing and will provide us with opportunities to take advantage of market volatility in 2019, which I'm sure we'll get. Anyway, thank you very much for all your goodwill in 2018. Hopefully we can do the right thing by you in the year ahead.